a quick look at the markets, where one agency seems to think that Greece may be in default. Paul Vigna joins us now to explain what's going on.
How geeky and technical do you want to get on this?
Let me read this. A financial industry group has ruled that Greece's debt restructuring constituted a credit event. Okay, now in English, I think that means a default.
Let's keep this very, very simple. Yes. What Greece did was they completed an offer of swapping bonds for their old bonds with the bondholders. That was ruled to be a default. They're paying much, much less than the old bonds. They're replacing new bonds with old bonds for much, much less. It was ruled, as everyone should have expected, a default. What that means is that these credit default swaps, these insurance contract-like entities.
He's doing a good job.
He's doing a great job. Keep going. We're not going to interrupt you.
All right, so these credit default swaps will be triggered, meaning that somebody is going to, it's an insurance contract. The people who sold it are going to have to pay out on it. The people who hold it are going to get paid.
And this was widely expected to happen.
The market was kind of, there were a lot of questions about whether or not this was going to happen. I mean, anybody looking at it just on the face of it would say, of course it's a default. Of course it's a default. But there was some thought that maybe it wouldn't be ruled that way. But it was. That's the bottom line. So now these CDS are going to be triggered. The question is, is it? And the big fear was that this would all be disorderly. It seems to be it seems that it's being handled in a rather orderly way. You'll probably have these things settled and paid for. There'll be an auction to determine. I don't even want to get into it. It will probably be handled in an orderly way. The market went down on it.
Let's see the market.
For the week, the S&P eked out a small gain. The Dow, you see the Dow was up for the day, but the Dow was actually down a little bit for the week, less than half a percent.
Let's see the weekly chart if we can do that on that. That's the NASDAQ.
The NASDAQ didn't get to 3,000. That was the big market they were looking for. The S&P was up a little bit, a couple of points on the week. So, look, you had a huge sell-off on Tuesday.
And we've got
we've
got oil near $107 a barrel.
Right around there,
suggests that. Do you have a car? I don't, but I mean, it's
I have a car.
You
I have a car. It hurts. It hurts to put gas in.
When you go to the pump, do you feel like,
I drive so little, Simon. It's like maybe once a month I fill
Once a month. So, well, maybe this time next year you'll be feeling the pain, because apparently it hurts when you go to the pump these days.
Listen, it hurts. You're right. I drive to the bus stop. I don't have to fill it up that often. But I mean, it stinks. And listen, I live in New Jersey. We have cheap gas in New Jersey.
And it's basically been flat for the month.
And then, an eventful month, but at the end, it's where it started.
So, question for both of you. We're seeing these gasoline prices go up and up and up, and no end in sight to that. And we haven't even got to the summer driving season. Christine, does that kill the economy?
It doesn't help the recovery, but I don't think it kills the economy.
I don't know if I think if it keeps getting higher, I think it could very well kill the economy. Right now, it's just hurting. You can see it in consumer spending. Consumer spending is not going very strongly right now. We had the jobs report this morning. Yes, we created a lot of jobs. No, we didn't create a lot of wage growth. And when you combine that with the high oil prices, Simon, that puts a big crimp in consumers. I don't care what anyone says. It's
like a tax.
Yeah, and look, it's not even a political issue. It's just the reality of it. If the gas prices go up, it's going to hurt consumers.
Vacuum cleaner in your wallet. There you go.
There you go. All right,
we have to leave it there.